Good afternoon. In this video, we're going to go over this past week's trades and a weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please subscribe to the channel and like the video. These videos take a lot of time to make. This is how you learn. So I did finish the week better this week than last week. I had 24 wins and 3 losses. 2 of the losses were on Friday, I believe. Yeah. And so I had a win rate of 88.89%, so I'm happy. I'm pleased with that. I like to try to get over 85, and I know last week I was like 81, I believe. I don't remember, but definitely did better this week. Now, with that said, let's just jump right into it. I'm trying to find Monday. I get so much stuff on my... What was Monday's date? The 10th, okay. Okay, Monday the 10th, the trade ideas room, I said Microsoft calls over 235 and BA calls over 132. Now, I didn't take either one of those. I didn't look at SPY. What was SPY doing on this day? Oh yeah, I remember why I didn't put SPY up there. I mean, you get this run up right here, and it's right around 364, and I'd have to put a put the call rate around here around 262.60 to 361. So it seems like a $3 drop, and I don't like those kind of drops for a an area to get in. So sometimes if there's too much of a gap up or gap down, I'll just wait for the 10-minute candle, and then I'll take it from there, and that's what I ended up doing. First 10-minute candle formed. I didn't take BA or Microsoft, obviously, so 10-minute candle formed. I was thinking calls, and then obviously the market's dumping. I'm not going to take calls if the market's dumping. So first 10-minute candle is green, is red. Wait for the second 10-minute candle. And I definitely grabbed 3,600 puts at $6 there, and they went from $6 to $7.50 on that move right there. So I did not. I think we're pretty far out of the money too. So yeah, 3,600 puts. So yeah, that's why it seems like the move didn't really go that much, because I was too far out of the money. When you get these big gap ups, gap downs, and you get a lot of volatility, that you're going to, SPX is going to be expensive. And SPX was pretty much expensive almost all week long at first. But also one thing I've been doing, I usually always wait for the first 10-minute candle to form. And what's been happening a lot lately is you get these fake out candles where it'll dump. You get the next minute will be a low, and it will get you in, then it will rip on you. So I've been taking, I did take the wait out the first 10 minutes that day, but most of the week I've been not waiting for it. I've just been taking it. It breaks the area I'm looking at, I'm going to take it. So that's what I've been doing. You have to adjust to the market. And that's just the way it is, because the market's always changing. You just have to learn to adapt to it. And I didn't want to wait out the first 30 minutes, and that was another thing I was thinking. But when you get like action like this, you don't know when it's gonna break out, or when it's gonna what area it's gonna drop or break out. I mean, you could grab it here thinking it's gonna dump and it doesn't, or you could have grabbed it here thinking it's gonna pop and it doesn't. I mean, this is hard to predict when it's doing this. So I don't really like choppy markets. So. Let's see. What was the next play? SPX. Yeah, because I had the 3,600 puts right here from 6 to 750. Then I had 3,610 at 1033, which was right up here. When it popped up, I grabbed it when it came back down. The 3,610 puts I had at 780, and they went from 780 to 1670, so that was 100% play rate there. And that drop, 10:30. I think I don't know what was happening at 10:30. It could have been news. This is definitely a news candle. Then I waited and grabbed puts again at 2 o'clock, which is right here. Got this move, got this move. I didn't touch this. I probably could have grabbed this. Just wasn't sure. Bear flag right there. Then it ends up breaking down, so it did fall apart. But I didn't take it. I didn't take this up. But I did take puts right after we had this massive green candle. I don't remember. It was probably news again. Oh, and this might have been the tariffs. The tariff news where Biden was going to give tariff relief or something like that. We get these big massive candles. They end up giving some back, like right here. Came back up halfway. Big massive candle came back and actually almost completely came back down, but didn't quite. But yeah, so I grabbed puts right here. I grabbed the 3620 puts at 720, and they went from 720 to 1480 right there, 1410 right there. So a nice good play right there. And this is the chop I was just talking about. You don't know what's going to do what. So I grabbed puts at 229, which is right 239, sorry, 239. So I grabbed it right here. So I probably grabbed it when it came through VWAP. So yeah, I had the 36. Oh, I grabbed calls. That's not, sorry, I didn't grab puts. I grabbed the 3630 calls at 239. So right here, this is where I thought it was going to break out. Got the pullback. It came back up real quickly, so I grabbed calls right here, thinking we were going to pop. That definitely makes more sense. Any other time it drops like this and it comes back really fast, usually breaks out. So I was not too shy about grabbing the calls right here, thinking, okay, we're going to get a pop. Then it pulled back. Then it ended up averaging down at 316, which is right. I think right in here, I think I grabbed it again. Yeah, right in here is where I grabbed it again. So yeah, got it here, came back down, and when I got right here, I averaged down because I initially got it at $6. I averaged more at $4.50, making my average $4.95, and it popped just a tiny bit, and I just got out. They went from $4.95 to $5.70, so just took it and got out. I'm glad I did because it just dropped back down and just stayed in this little channel. So I thought for sure it was going to pop here, and then I thought for sure it was going to pop here, and it just this is just part of trading. You know, you get chopped and you sit there and you wait out the chop and you think you're going to get the right entry, and it chops more or it takes off without you. So you just how it is, I guess. So Tuesday, let's see what day that was. Monday 4 wins. Tuesday I took let's see, I took SPX right out of the morning. Okay, now for traded newsroom on Tuesday the 11th, SPY calls over 360 and Amazon calls over 114. 360, which is this area right here, it popped up, came back down. I thought for sure if it ended up taking off green, we got over this 360 area, we could actually end up seeing probably a nice pop up into the 362, even 364 area. So, but the first 10-minute candle formed, it was red, and I took the new lower day. I took the SPX 3560 puts at 850, and they went from 850 to 1170. And then I took calls at 1033, which was right here. As you can see, had the nice little drop, nice green candle, rejects VWAP, then it comes back up. Right when it gets through VWAP, that is where I grab it. Grab the 3600 calls at 750, and then went from 750 to 12, and that push right there, it pulled back. I didn't think to grab calls here. I probably should have, but I wasn't sure. The market's just been going down. All the large pops have just been getting hammered on. So I thought for sure that because we dropped at open, we came back up, that we were gonna not break higher day right here. So that is definitely why I took it here. Pull back on higher day, but actually bursted through it. I didn't want to chase it. So instead, I tried to pick the top. Sometimes it's not always a good idea to pick the top of the bottom, but if you pick it in the right areas, right resistance areas, moving averages, they do end up paying off, and you end up getting a move out of it. I did grab 3,600 puts at 1121, which is right here. It looks like must have yeah, right here is where I got it. 10 what? No, 1121. Right in here. See how it wicked up, it wicked here, then it started to come back down. This is where I ended up grabbing. You can see a little bit of the wick right there. So those puts I got at what, 1030. Yeah, they went from 1030 to 1355, and that definitely was probably closer to at the money. But yeah, that was some pretty good moves though. Yeah, 850 to 1170. Then you get the 750 to 12. I ignored this. And then it rejected right in this area of 360 or 359.50. Rejected it. Then it wicked here again. It started to come down. That's why I ended up grabbing those 3,600 puts. It's weird how I had 3,600 calls and 3,600 puts. And I got the 3,600 puts again at 1129. So I grabbed it again right up here. Now I see where I grabbed up here, pre-market high. I grabbed the 3,600 puts again at 980, and they went from 980 to $10.80. So I got a dollar move out of that. Then it just ripped higher. Then I grabbed puts at 1145. I grabbed the 3610 puts at 1145. So yeah, I got it here. The rejection of pre-market high when it popped up again. You can see the previous day, this is where it's been struggling, that 361 area. So when it started to pull back, actually I didn't even wait for it to start pull back. I got it about 11. No, I did. Okay. I got it in this candle right here. When it started to reject the 361.50 area and started to come down, that's where I did end up grabbing the 3610 puts at $8. And they went from $8 to $13.20 right there. And then I took puts again for the last time at 1242, which is right here. Trying to see. This is the 363 area. Let me see. Let me look at the hourly. See why I took it there. Definitely can see a divergence going on. Oh yeah, you can see on the hourly the 363. You got support right here, support, and you got actually, yeah, it's support right here, resistance right here, support, support, a little bit of support right here, and you can see it's acted as resistance right there, and support here. So that's a pretty big area, that 363 area. So plus you're getting a little bit of a divergence. It's making a higher high, and the MACD is kind of like flattening out. So getting a divergence going on right there. So I took the 3625 puts at 740, and they went from 740 to 1240 right there in that little drop. Then I just pretty much sat out for the rest of the day, and I should have grabbed this move. In fact, I didn't chase that. This was definitely news related. I don't remember what it was. I don't remember, but yeah, it dumped hard, and I didn't want to chase it down here at the 360, so I just left it. And I already had 6 trades for the day. I don't want to over trade, so I've just been shutting myself down. And when I find myself trading more than I should, that's when I end up trading in the other account. So the IRAs and the challenges and stuff like that. So the the 12th SPX, sorry, FOMC day on the 12th, SPY puts under 357.50 and Tesla calls over 219. Let me get to the 12th. This is probably one of the most boring FOMCs I've ever seen. Usually you get some kind of move, and it didn't move. And usually when you have these rehash FOMC days, you usually get pretty big moves out of them because even though if Powell's not speaking, that's when they end up just saying some stuff or putting some stuff in the statement just to see how the market reacts and stuff like that. So sometimes you get a surprise or something, but it didn't really go anywhere. I was just actually surprised it stayed in a $2 range, $2.50 range. So this was the day I did not want to. I've been getting faked out at the second 10-minute candles lately. So I said in the trade idea room, puts under 357.50, which is down here, pre-market low. As soon as it broke that, I took it. I did not wait the 10 minutes, so I grabbed the 357 puts at 207. They went from 207 to 252 in that drop right there, and it dropped nice, then just quickly rebounded. So yeah, you could have waited for the 10-minute candle to form. You could have grabbed calls right here. Might have been able to get a good move if you were fast enough, but this is what I'm talking about, that it has a green candle and you go to buy the next 10-minute candle and end up being a fake out and end up sucking you in and taking you out. So you got to be careful of that. I'll probably end up trying to do the same thing next week if the market is still acting crazy like that. So then at 10:46 I had 3610 SPX calls. What time? 10:46. Right down here. I got it right through here, right through VWAP. It dropped, popped back up, dropped again. They came back up as soon as I got through VWAP. That's where I grabbed the 3610 calls at 670, and they went from 670 to 1160 in that pop. And it didn't touch anything until SPX, and SPX is right here. So I took the 3600 calls at 840, and the 3570 puts a 750 as a strangle. Now the initial reaction started to drop just for a little bit, that it popped. So I sold the calls. The calls went from 840 to 1280. And so I held on to the puts. It looked like the puts were going to come and actually come into play. And I thought for sure, okay, we rejected the 200 EMA. I thought about averaging down on my puts that were deep red right there. But I had a nice little play on the calls, so I wasn't too worried about it. So I just kept holding. I thought for sure we got down here, we were going to actually see the big dump. Then it just chopped the rest of the day, and then it tried to dump, but it was way too late. They were never coming back from that. But thought for sure right here those puts would have actually had a nice dump and paid off, but it didn't. I think this is the first loss I've taken on a FOMC strangle in probably a year plus. Usually I do really well on it. This was the first move. Thought for sure it was going to come down, but it didn't. Sometimes they just drop a little bit, then they just rip and keep going, or they pop a little bit and just keep dropping and not look back. So FOMC is very tricky, and it's one of those things where you have to be really fast to know what you're doing. If you don't know what you're doing, I would not touch FOMC. So I would just stay right away from it. So yeah, FOMC, first loss in a long time on that. Then on the 13th, SPY calls over 350. He had this bad numbers, this massive drop from 361, 362 down to 248. I mean, that is a huge drop. And I was telling everybody in the room that whenever SPY gaps down a lot, especially like this, especially on bad news, everybody and their mother is going to try to pile into puts for a continuation down, and that's when you end up seeing SPY pop, and everyone's scratching their heads because why is SPY popping when it gapped down so much on bad news? That's just because everyone just went on the same side, and you're getting squeezed out. The same thing works to the other direction too, where SPY gaps up really huge, and everyone's piling the calls thinking it's going to continue to run. Sometimes it does, sometimes it doesn't, but usually when you have those big monster gap ups and ends up selling off right at open, people are taking profits, and too many people getting in on the call side. Whenever there's too many people on one side, regardless of what the chart's doing, you're going to end up seeing the opposite. So That's why you see me sometimes going against the trend, is that I've seen it too many times where it just too many people get too much FOMO and they just pull the rug on them, and then just like, well, they don't see it coming. And I most of the time see it coming, but not all the time. It just sometimes you just get on the wrong side, and that's just where trading is, and it is what it is. So I took 350 calls right when it broke over the 350 area, so I didn't hesitate. I grabbed the 350 calls at 346. They went from 346 to 596, and that push up. Then I grabbed puts at 1006, which is right here. It rejected the 20 EMA. I was looking at that for a quick little play, so I grabbed the 3,500 puts at 680, and they went from 680 to 810. When you get this much price difference between 348 and 348, the 20 EMA being up here right around 354, and that's a $6 push. So when it gets to the 20 EMA, there's quite a bit of distance between price and the moving average that it's going to actually, most of the time, not every time, nothing is 100% in trading, but a good majority of the time, high probability that it's going to reject at least once, even if it's a little bit. That's why I try to catch the first initial reaction off the 20 EMA, because you usually get one. If the market's too strong, you're not going to get another one. It's just going to take off, and that's what it did right here. So I got this play right here that went from 680 to 810. Not bad. Then I took puts again at 1109, which is right here. Took puts right here. I probably have to look into this. So 1109. No, so I got it right here. Oh, I can see why I got it here. I got it right here because from the previous day, 356, I grabbed it right there, thinking we were going to reject. We did a little bit, not much. I had the 3550 puts at 780, and then 740, and then went from 740 to 910. You can see I got it right up here, and it dropped a little bit right there. But still, it didn't just reacted just enough. But yeah, I just ended up squeezing more and more. Then I ended up, I definitely did not want to buy this, especially after we had this massive drop and bad news. I was expecting this kind of a move, but I was not expecting this. Maybe this was the area where Biden said that he was going to give China tariff relief or something. Yeah, this is probably the news right here. So I took puts again at what? What's the timestamp on this? 11:20, which is right up here. Pre-market high. I can see we got a nice little rejection. I got it at 870, and I ended up averaging down to let's see. I probably got it right here, right at pre-market high. Then when it popped up more, I averaged down more. So yeah, I initially got it for 870, and it popped up more over here, over pre-market high. I probably got it right here, and I added up right up in here. I added more at 550, bringing my average to 640, and those puts, those 3570 puts, wait a minute. Yeah, I got the 3570 puts at 870. I added at 680, making my new average 775. So yeah, they went from 775 to 1025, and that drop right there. So that was kind of plus you have this huge, look at the size of these big green candles. Big green candle. I mean, when you have these strong green candles, you're going to end up having some kind of a pullback. And I kind of grabbed it a little early, but I was pretty confident we would reject up here. And I think the RCT trend line was a little lower than it is now. So I had no problem averaging down and getting that play. Then I grabbed puts again. I kept grabbing the top. I mean, at this point, I thought it was over right here. But when we had the news, I was thinking, okay, right here we're going to get it. So I kept trying to pick the top, which all my ideas ended up being right, but they just very dangerous to play. And sometimes I just have no fear of what I'm doing. And I did end up grabbing puts again at, what's the timestamp on this one? 11:38, which is right up here. Now, why did I take that up here? Let's see. You can see it's a pivot right here. See, it's rejecting support. Right in here, you get resistance, support, and resistance right in through here too. So there's a pretty big pivot area, and I think there might have been a moving average or something on the daily or something. I don't remember, but or the weekly. I don't really remember. But anyways, I took it here. Again, maybe the RCT trend line was up here more than it was down here. I don't know. The thing adjusts every day, so it does. It is kind of hard to tell, but I probably grabbed it up here in the RCT trend line. I grabbed what the what was the timestamp again? 11:38. So I grabbed it in this candle. I grabbed the 3600 puts at $9, and it went against me because I averaged down at 550, making my new average 640. And they went from 640 to 1070 right there. So that was a nice little play right there off the 365 area. Sometimes you just you got to get it early, because sometimes SPY comes up short or overshoots areas. You see it a lot when, especially on like resistance levels and support levels, where they'll come down to it and not really touch. They'll come like within a few pennies or 10-20 cents, or will overshoot it 10-20 cents. Just market likes to do that. So sometimes I like to buy a little right before it, just in case it comes up short. And if I do get it and it does go a little more, I have no problem averaging down. I've been playing a little smaller than I usually do, and especially on days like this, so I leave room to average down in case I'm wrong, and in that case I did. So the 640 went to 1070, so I got a nice little play out of that. Then I grabbed puts again at 136, which is right here. When we overshot, we dipped down, broke out. When it refused to break out, well, actually it did break out, but when it did break out and quickly started to come back, that's where I grabbed puts. I grabbed the 3660 puts at 940. It was a fake out. They went from 940 to 1350 in that drop right there. Then I grabbed actually, yeah, it went from 940 to 13 in this drop right here. End of the day, at the money. I might have been even, yeah, I was definitely at the money at $9.40. Then I grabbed, let's see, 207. So I grabbed it here. 207's right here when it came back up. So yeah, I grabbed the first play right here from 940 to 1350 here because of the false breakout. Obviously, when you're up $4, you've got to take it. Came back up when it started to try to bounce here. It came back down, and right when it broke below this area of 365.10, I'll even say 365, that's where I grabbed it again for the last time. The 3660 puts at 980, and they went from 980 to $16 in that push. So it doesn't take much to get these things to go, and you can see because I got them up here at 940, and I was able to buy it down here at 980. It just shows that at this time of day, even the smallest 20 minutes of chop right here will just destroy out of the money plays, even at the money. So, but if you get the direction and the timing right, they'll move really, really fast. I mean, as you can see right here, we caught it right here to here, and they went for $6 plus, just in that tiny move right there. I love these end of the day plays on the SPX. You catch the move, and yes, when you end up getting those 500,000% moves, if you can time it right and catch it right, and it doesn't chop like it did right here at the end of the day. So was that the last play? Yeah, for the 13th. Now Friday, I didn't have that great of a day. Trade ideas room, SPY goes over 371, Tesla puts under 220.50. Right here. Now the thing I was looking at was there's a gap right here, 370, 3 to the 371. So basically over 371 to 373 we had a gap, and the gap needs to get filled. So we had the first 10-minute, well, it doesn't need to be, well, it usually does, it's just a matter of when. But anyways, my thesis going into this play was, I mean, I didn't want to go continue with call, especially after this run, but I was thinking that because we rejected this 371 or 371.50 area, that if we came back up to it like we did right here, that we were probably going to end up breaking out and go at least attempting to do a gap fill, a quick run to 373. So when it did this and opened up here next, and right when it was getting ready to break out, I grabbed it. I grabbed the 371 calls at 190, I think, for that gap close, and then it just dumped. So I was not too happy about that. Then I ended up buying Tesla when it broke down from that level. Definitely probably should have held that long because they went in the money. Right when it broke below this 220 area, I grabbed the 220 puts at $2, and they went from $2 to $7.86. So definitely 200% play. But if I remember, I was looking at the end of the day, I think those those puts, if you held the entire day, I think they were like $15. It was crazy. So was not expecting this kind of a dump, but I definitely was expecting at least a dump to 220 to 218 to even down to this 217 area. But market's been kind of weird lately. So that was a nice play. Definitely made up the bad SPY call, and so then I ended up taking SPX puts at what, 10, is that 01? Yeah, 1001. 1001 right here. I think news dropped, and I chased it. I even put it in the thing, in the alert. I was chasing it. I got the 3600 puts at, oh, it was the consumer sentiment report that came out at 10 o'clock. It dumped. It came back up a little bit, and that's when I ended up grabbing puts. I grabbed the 3600 puts at 720. I stated I was chasing, and they went from 720 to 1650, so they went 100% on that play. Then I switched to calls at 1041, which is right here in this candle, right there in this candle. I got the 3650 calls at 1140, and it dropped down, and I ended up averaging down at 850, making my new average 925. I think I averaged down here, and then it popped, and those calls, 3650 calls with the average of 925, went from 925 to $17 in that play right there. Then I took calls again at 1125, which is right here, 1125 in this candle. So we got the green candle here. It came back down. Let's see, what time did I get that one? 1041. So yeah, I got calls right here. Average down, able to get out. Then it came back down. I reloaded, thinking that we were gonna pop, because we were starting to get this little rounded bottom. In fact, I think I remember buying it closer to up here around the 362.45 area, anticipating the breakout. As soon as I bought, I think dumped. So I didn't average down. I just left it. It's in a little smaller. I wasn't too worried about it. Plus, I've had a pretty decent couple calls already. But then I ended up taking calls at again at 1159, which is right down here. Of course, you can see the pop right there. So I got the 3630 calls at 890. I got him down here. Not quite sure why I got him down here. $360. Oh, I can see the pivot right here. Yeah. 360 pivot, that's why I got it. When it broke below it, sometimes when you have these little areas that they kind of they definitely trap the longs here, me of course, and then it flushed it, getting in the puts, which the puts played out. But when it broke down through here and got below the 360, I definitely grabbed the 3630 calls at 890. And they went from 890 to 1180 just in that little, you can see the wick right up here. And so I just, sorry, my throat's very scratchy again, probably getting a cold again. This weather here is just having huge swings. But anyways, you can see the wick up right there. So we got the little bit of a bounce. What was it, 890 to 1180, almost a $3 bounce. Then I waited and grabbed calls at the end of day 327, which is right here, thinking that we were going to have a pop end of the day, at least above 360. So I grabbed 3,600 calls at 520, and they went from 520 to $9. So the end of the day plays are really, really hard to take because sometimes they just move so quickly, and sometimes they just they go worthless within seconds or minutes. So if you don't want to deal with the risk at the end of the day, don't play it because they're very risky. I thought for sure we were gonna get some kind of a bounce right here, and I still can't believe till right now that that we didn't close that gap. We were right up here. I thought for sure we were just gonna make a run for it and close that gap, and I was not expecting this kind of a dump. Then I was kind of expecting it to bounce. It didn't bounce. I tried to, and it got crapped on. Tried to, crapped on. Tried to, crapped on. It's just the market has just been relentless the last 2 days. It just wants to keep going in that direction and not really drop or V rally or whatever. So it just goes and just keeps going. So it makes, if you chase it, it makes chasing very dangerous. And I mean, that's just the market. You have to deal with it, and you either wait for the right areas to play, or you just chase and just hope you just don't take a loss on the chase. I try not to chase, and that's why when you have drops like this, I'm trying to find the bottom or a nice little quick bounce play. And when it gets over bought like this, it's too exaggerated, I start looking for the other side, start looking at the moving averages, start looking at the indicators and the resistance and support levels to try to see if I can get a pullback on a drop on these exaggerated runs, because I don't really like chasing like these moves. I mean, you got what, if you were to buy the breakout here at 366, it's already made through 48 to 366. That's what, 18-point move. That's just ridiculous buying calls after an $18 move. SPY does not move like that. Usually the most extreme ranges are anywhere from 12 to 15. And this was an $18 day. Well, it's even more than $18. It was a $20 day. And I think that someone in the room said it's only happened like 3 times in stock market history. So that's extremely, extremely rare. I think the last time was the COVID crash when the Fed dropped its nuke that it was going to save the market and stuff like that. That's the last time I think that we had a big, huge $20 day too. But these days are very, very rare, and you see a $15 day. I'm starting to look at the other side because you don't see $15 day plus. So buying calls up here is just, in my opinion, stupid. But hey, I mean, you could have probably gotten a play, but like I said, it's only happened 3 times in stock market history, so I do not like playing those odds. So anyways, that's going to do it for the recap. I hope this has helped you understand my logic, my thinking, what I was doing, and that's going to do it. Thanks for watching.